All right. Good morning, good afternoon, good evening to you, wherever you are in this beautiful world. Welcome to our Thursday morning Inner Circle Live session. I'm your host, Ryan Carthage. Hope everybody had an awesome Wednesday and is having an awesome start to the morning. So, without further ado, please turn off all distractions, grab a pen and paper for notes, and let's make sure that we participate and engage. All right. So, got a bit to cover this morning from a fundamental perspective. We had interest rate for the dollar yesterday. We're preparing for the ECB come to the microphone with their interest rate decision. We want to see where things stand. So let's hop over to trading economics to check things out and see what we have popping for the day. All right. Real quick, just drop me one in the chat if you can hear me okay. Beautiful. Appreciate you. So, we will start with the ECB. All right. ECB is expected to raise interest rate for the seventh consecutive meeting, pushing borrowing costs to new highs not seen since 2008. Most investors predict a 25 basis point hike. As tighter lending conditions started to weigh on the economy, but another half point increase may also be on the table given persistent inflationary pressure. So the ECB could potentially come in stronger than expected, right? And obviously that'll continue to push our hawkish bias on the euro, right? So we want to keep our eyes on that potential, right? So as we look at the euro pairs this morning, see where they sit, we want to keep our minds on that. We could see a quote unquote surprise, right? Being more than expected. Let's take a look at the dollar. Let's see if it shows it on here. Might have to go to the calendar to get it. But the Fed increased the rate by the expected 25 basis points. But they stated that they would go to more of a data-dependent process going forward, not removing the option to raise rates further if necessary, right? So what the market is calling it is a hawkish pause, right? The potential that they could pause rates at the next meeting in June, but not a guarantee, right? So that's what occurred. I'm not able to find the article here, but that's what occurred yesterday from the Fed. So looking at here we go. Dollar pressure by Fed bets. Dollar index weakened toward 101 mark on Thursday, sliding for the third straight session as the Fed delivered a widely expected 25 basis point rate hike, but removed language from its policy statement that it anticipates further increases would be needed. However, Fed Chair Powell said that the committee's current inflation outlook does not support the case for rate cuts. The dollar also pressured as fears of a wider contagion with the U.S. regional bank space a return following news that PacWest Bank, that's a new one, has been weighing strategic options, including possible sell. That's new news, PacWest Bank. Investors now look ahead to the jobless rate claims on Thursday and the monthly report on Friday to guide monetary policy outlook. Elsewhere, ECB expected to tighten. So they did remove that language, and they're looking at data going forward. This PacWest Bank, that's an interesting one. I didn't catch that yesterday, but that's a new bank added to the list of regional banks going through what they're going through. So that definitely adds another twist to the story, right? But that's where we are from a fundamental perspective there. Over to the calendar. We also had yesterday ADP non-farm employment change came in above expectation. We'll see what happens on Friday. ISM services PMI came in right about expectation. So not a big difference there. And then we got the federal funds rate there. Today, Euro, we're watching that. We have unemployment claims coming in at 8:30. We could see this number come in around that expectation, maybe a little bit higher, as some of those tech company layoffs are starting to hit the books, right? That first round of layoffs, they put 4, 5, 3, 4, 5, 6 months out. Some a little further than that. And then the second round of layoffs are also starting to hit the books, where they put them at 3 months, 4 months. So we could start to see an increase in that unemployment rate as well. So we'll see what happens there. Then we got the press conference at 8:45, President Lagarde. And then for the Bank of Canada, we got Governor Malcolm coming to the microphone at 12:50. All right. And then tonight we have the RBA with their policy statement, right? They surprised the market and increased rates by 25 basis points the other day. So we'll see what happened, what they discussed in their rate statement coming out at 9:30 this evening. All right. So that is the roundup on the fundamental side of things. Do we have any questions? No?
I do. I've been holding on to this because, okay, it's two things. The first thing, the thing about a lot of these countries not utilizing the U.S. dollar, is that causing some effect? Because matter of fact, I got a couple of friends, they over in Italy right now. You know, they got to pay to use their bathrooms, and they went to give America money. They like, no, we're not doing American money. They literally had to go exchange to the currency to do it. The other part is with the AI situation. Could it? I don't know how to ask that question, so I'll wait on that one. I'll think about that one. But the AI and the technology, you know, because even though that it's a lot of layoffs and stuff right now, I'm hearing all this talk. You know, a lot of people, you know, our company is too, is to use a lot of automation and artificial intelligence to get some of the jobs done. So, I mean, is this so like, you know, just the quiet from the storm?
To be honest with you, I don't think so. Here's the deal. Will AI remove some jobs? Sure. Right. The thing about it is it'll remove the jobs from the people that aren't willing to evolve with technology. That's my opinion. Right. That's my opinion. If you're not willing to evolve with technology and you don't have a growth mindset to go into learning new skills, yeah, AI is going to take your job, right? But if you're open to learning AI and how it works, right, it's not going to take all jobs, right? That's not going to be a thing. Before we get robots to take over everything, right? We got a while to go, right? We're not there yet. We're not at the iRobot stage yet. But I have my theories on the movie and the times. But what we will have is AI will challenge companies to look at things differently and challenge people to look at things differently, right? And is going to challenge us as individuals to be open to learning new skills. And if we're open to learning new skills, then we can take advantage of AI, right, and help push things in different directions. So it's all about the perspective, just like everything else, right? If we take the perspective of, oh, it's going to take my job, I should go elsewhere, then yeah, it may, right? But if we take the perspective of, let me learn how to utilize this for my advantage, right? Then we can put ourselves in advantageous situations to be able to be assets to companies where that we would like to work at, if that's your thing. So that's my perspective on it. I don't think these layoffs have anything to do with AI. I don't think the future numbers over the next 3 to 6 months have anything to do with AI. There are some companies that are trying to utilize AI for some of their back-end processes and things like that that could decrease the number of jobs that they offer in the future. But I don't think that has anything to do with these unemployment numbers that are going to come out over the next few months. I think these unemployment numbers are primarily due to companies borrowing too much money and companies, along with these banks, having these bad bonds on their balance sheet, right? Because these companies also invested in these government bonds that are no good, and they invested in them heavily. So they're trying to cover their butt so that they're not in the same situation some of these regional banks are, right? And part of the reason that some of these regional banks are in the situation is because they changed some of the policy, and they didn't have to have as much cash reserve as they did in the past. They were able to loan out all of their money and not have anything in reserve. And they went out and bought these bonds that are bad, and they're realizing those losses because of the interest rate increases, right? So that's why you're seeing these layoffs, because everybody's trying to cover their butt because the tide's going out, and a lot of them are swimming naked right now. They don't have cash reserves. They borrowed too much. They did too much with with borrowed money. Now the interest rates are increasing. The ones that do have cash, the companies, they don't want to spend it, right? Because what's that going to do? That's going to take down their available cash, which will decrease the value of the company, which will then decrease the value for the shareholders, right? If it decreases the value for the shareholders, that stock price is going to decrease, right? The company value goes down. They don't want to do that. So what do? They lay off people. They cut money off of that balance sheet. The easiest way to do that is lay off people. It's immediate impact to the bottom line. And now they can say, oh, we're making changes to be more efficient, to allow ourselves to be more flexible. What they're really doing is they're covering the butt, right? So that's what I think these layoffs are attributed to in the near term. And that's my thought on AI as well. I definitely think it's something that, and honestly, right, I think all of us can choose to look at it in the same fashion if we choose to look at it from a perspective of, this is a skill I can learn to utilize to my benefit, be it for a company that you work for or you building your own company, right?
I mean, honestly, the discussion with the AI is like the 80s all over again, because when computers first came, they said it was gonna take over our minds anyway. So it's, to me, I'm re-seeing history. But I guess with the AI, it's like the quiet for the storm. It's like, okay, we're gonna get rid of all these people, implement this technology, and then boom, tech companies back up. I guess that's what I was seeing. Like, they just getting rid of people so they can automate this stuff and work for them. So I mean, I guess that's why I was going with it.
And there will be some of that automation, right? Because you want to be more efficient in your processes. But I think I do agree with you. History kind of showing itself again in a different form. This one would be a bit larger because of the flexibility that it gives. But yes, I agree with you from that perspective. And with tech companies, they're going to invest in it, and they're going to be able to utilize it. And it's part of that wave process, right? right? You have the ups and downs in the market, and this is one of those downs that's coming. And the Fed has already said they're expecting a mild recession, right? And they give the best case scenario because they don't want to scare everybody. But if we have a mild recession, we're going to see things push down even further, which would give opportunity, right? And then at some point, interest rates could potentially come back down. When they come back down, you'll see another wave of borrowing like crazy, right? And that borrowing like crazy, you'll see a lot of these advances that people are preparing for now really start to hit hyperdrive. So yes, that will be a thing, and tech companies will get on board and push things to another level from an innovation perspective. Yeah, I do agree with that. Good discussion. With the strength of the yen and the Swissy and some bank values, Fed talk, are we in a risk off situation? I think we're moving toward that. Let me see. Let's see. We haven't looked at the VIX in a while, but we got the volatility index, right? We talk about it being over or under 20, and right now we're under 20, right? So technically we're still in a risk on environment. But we could be moving toward that risk-off environment as more banks start to fail, right? And you're going to hear, similar to 2008, you're going to continue to hear the narrative, oh, this isn't widespread, this isn't widespread, this isn't widespread, until they can't keep that narrative any longer. But I do believe it is widespread. I don't believe that it's contained. But they're going to continue to balance that and give that narrative so that the market doesn't be shocked, right? And they can kind of try to taper things off and try to stave off the bottom falling out. So are we inching toward a risk off environment? Yes. The I don't think the strength in the yen will last very long in the short term. I do think the strength in the yen will come in the future. I think we'll get some reversals in the market from a yen perspective. But the safe haven that's kind of standing at the forefront is the Swissy. And we could continue to see the Swissy kind of stay there for a bit as we inch closer and closer to that risk off environment. And then when we see that major shift, we could see both of them really start to gain some steam. Yeah. I think the big banks are taking over the small banks because the small banks don't have the liquidity that the big banks do. Like I said, as they have put a lot of money into these bonds that are no good, and they can't handle the losses that they're seeing, so they're ultimately failing, right? And with interest rates increasing and these bonds decreasing, then you have as you see more of these small banks fail, you also have people taking their money out of the bank, out of those smaller banks, and moving it to larger banks, because there's a potential that, especially if they have over $250,000, that it won't be covered by the FDIC, right? And if it's not covered by the FDIC, then they lose their money. Now, the FDIC did come in with Janet Yellen and say, all right, we'll cover deposits to an unlimited number, which that leaves some uncertainty on what that actually means, because currently the FDIC only covers deposits up to $250,000. So if the FDIC does cover an unlimited amount of deposits, then we're going to continue to see an interesting situation when it comes to inflation, because what will have to happen if they cover all deposits, regardless of the amount, then you'll see the Fed have to print more money to cover those decreases, right? To cover those losses. So that will then add to the inflationary conversation. And if the Fed then decreases, starts to cut interest rates in the future, and we have inflation still rising because the Fed has to print more money to cover the FDIC and the government. Now we're in a situation that is going to be kind of sticky. And that's when things will really start to kind of kick in, and concern will come into the market because of that uncertainty and that very real scenario where we could have either a hyperinflation situation or a deflationary situation. So it'll get
So do you
real
think
when
that's
that
when they
happens.
start bringing those? You think that's when they start talking heavily about that digital thing that they trying to bring out?
To be honest with you, I don't even know if
The
that'll change.
Fed now, whatever it is.
I don't know if that'll change the situation, right? I don't know if that will stop the inflationary concerns if if the FDIC actually covers these amounts up to an infinity, because you'll still
Okay.
have inflation, you'll still have a decreased value of the dollar, right? Because you're printing more money, regardless of it would be it digital or anything else. Inflation will still continue to rise. So I don't know. I don't even
So,
think that digital piece will change the narrative. And so, no, I don't think they're picking and choosing which ones to cover. Ultimately, the banks are coming together to try to to try to put money into the pot because they don't want these regional banks to fail. Right before First Republic failed, you had 3 or 4 banks come together and put in 30. I think it was $30 million, $30 billion. Deposits into the bank to try to cover them so that they wouldn't fail. But because they were in such a bad situation and they had more of the deposits removed and taken from the bank, they ultimately failed anyway. So those banks come together didn't really happen. And so they're not picking and choosing. It's ultimately the banks that have that don't have any cover. They're stuck. They're stuck. And trust me, I do believe we will see quite a bit more of this occur, right? And it's something that it's something that has happened in the future, right? It isn't something that isn't known. It's just how severe is it, and what is causing it, right? And the combination of bond, bad bonds and high interest rates is what's causing the situation that puts a lot of these companies in some tight situations. So it definitely makes it interesting. So I think that there will be more failures, and you'll see Chase, Bank of America, PNC, your larger institutions buy up more banks, right? And you'll continue to see the government make tweaks to some of the laws when it comes to the size of banks, so that these banks can be picked up. And ultimately, the FDIC doesn't have to cover everything. They only have to cover a part of it. So, good conversation. Good conversation. So we'll see. We'll see what transpires. But it will be interesting. And like I said, I do think we'll see more bank failures coming soon. So here on the dollar, after the Fed decision, right, we pushed down to this daily support level, and we're holding tight so far at that daily level. Okay, we're holding at that daily level. We shall see how the rest of the week transpires to see if we push back to the top of this range with non-farm payroll coming in on Friday, right? Coming in tomorrow. So we'll see if we break this level and push deeper, or do we turn and push to the upside, even with the ECB conversation today, right? That could cause some bounce back and forth in the dollar as well. So that's the DXY. We're still trapped in the range. We're at the bottom of this smaller range now. We'll see if we push to the bottom of the larger range and get potentially a double bottom type scenario at this next level of daily support, or if we push back to the top there. So we'll watch that there and see what transpires. Let's take a look at some of these euros. I want to run through those. At the end of the session, I do want to take a look at actually, let's take a look at them now because they could shift. some of the setups that we posted in the Discord and that we took advantage of. This is that euro yen, right? Pushing down to that monthly support level at 148,419, inching closer to that TP1 level, right? Off of the entry there. It's 190 pips to the take profit, right? That was off that level where I entered. If you took it off the high, you're looking at 261 pips to the downside there. All right. This 328 is to TP2. That should be down there. So that's where we sit on the euro yen. Beautiful move to the downside. We'll see what happens with the ECB. But we could be in for, we'll see what happens. See if we break that level, we hit TP2, right? But if the ECB comes in hawkish, we could see this thing fly to the upside and give us that bounce off that support level. And what that means is, right, we come here to the 4 hour, right, and we're just shy of that 382 on the 4, right? But if you look at it, if you zoom out and take a look, previous resistance becoming future support, right? So we could see this support level hold and see this bounce. If I can grab that, there we go. Right, and see that bounce off of that previous resistance level. So that's what I got my eyes on here, looking for a reversal and price to push to the upside there. Nice work, Janice. Got out of TP1. Beautiful. I did too. I closed mine at TP1 as well. But, right, so we'll see if we get price to turn over and start making its way to the upside again against the yen with the euro. All right, so that's what I'm watching, this level here. If we get a break to the downside, then we could see price continue to fall to 146. So we'll watch and see what happens there. Okay, so that's what we're looking like, and we come back, right? Come back to where we were on the daily time frame, right? We had a 618 retracement. So price is making its way to the D extension. Okay, broke the B boundary, broke this monthly level, break and retest, coming back to retest that zone, right? So now, like I said, if that level holds, we'll see price continue pressing to the upside, ultimately making its way to the matching D extension, which is 962 pips away to the upside, right? So that's where we sit on the euro yen. Beautiful move to the downside for those able to take advantage of it, almost 200 pips. Closing in on TP1. Any questions on the euro yen? Anybody still holding that one? No? All right, cool deal. Cool deal. Let's let me see something here. Missed it. Didn't get in. Okay, that's cool. That's cool. Hey, more will be on the way, right? More will come. So that's the euro yen. We also posted this CAD yen. Another beautiful scenario here on the 1 hour, right? And this is another one that, and I'll walk back to the daily on this one as well, because I want to keep my eyes on this one too. But this move here, beautiful move. This one came out of software that we're working on. Yes, this was posted in the Discord channel. All these are posted in the Discord channel. It's CAD yen, right? We're looking for a push. My chart got deleted, but this was the setup here. We're looking for a push into that 118, 127 zone, like so. That was our stop loss. Trying to get it to pull up here. Let's see. Hold on one second. I'll see if I can get this to pull up, and we can look at the post so we can see it. Trade ideas. Here we go. All right. Here, let's hop over real quick. going to change my screen share over to the Discord. Boom. So there's a view. Get you guys here, right? There's a view of the Discord here. Bang, right? So this was the Euro Yen setup here, right? Looking for that move to the downside. Here's the CAD Yen setup here. Looking for that move to the downside. Okay, 169 pips to TP1 with a stop loss above the D at the D extension, 243 to TP2. Right, so that's what we're looking at there. Janice, you should have access to the Discord. I'll double check that, but you should have access to that. Got it. So that's where we are there. Let's go back to the charts. Right. And this is that CAD Yen setup. Bang. Right. And actually, I'm going to change this view. Let's go here. All right. So that's the CAD Yen setup there. And this was the move to the downside of TP2. And you see price pushed straight through that. All right. So that 243 is achieved. If you held that through, right, you got a little bit more. Okay. So off the entry, TP1, right? TP2. Okay. And now price is hovering around that 786 retracement level off the manual fib in that zone there. Okay. So beautiful move to the downside. Now, right, we had a previous consolidation zone here and some resistance, right? Past resistance becoming future support. All right. So this is that resistance zone here. So now looking to see if price holds. So we walk back to the 4 hour, right? 618 retracement on the 4. Boom. So now, right, do we get price to turn over, start making its way to the upside here? Okay. Do we start making our way to the upside? So here's a scenario, right? We got a nice deep retracement, price pushed into our sweet spot, 618. Now we look for our rules to be met and look for an opportunity to get long. Yes, Canadian dollars and oil's in an interesting situation, but risk to reward perspective, we also understand where the yen is, right? So, boom, could we see this? Right? So we wait for our confirmations to be met. We wait for our confirmations to be met on that reversal, and we look for a buying opportunity. Like so. Right? So here's a setup for those that trade the C to D moves, right? Stop outside the A, 139 pip stop loss for the potential of 568. And that'll get us to that 103,605 level, which as we bounce out to the daily time frame, will get us to that daily 382, right? Which we've been tracking the whole time, right? We've been tracking the whole time. So price is slowly making its way, even though it's choppy, slowly making its way. We do have to break above this daily level that we've struggled at. But if we get that next push to the upside on the 4, that'll take us to the that 382 on the daily time frame. Right? So that's how this works, right? That's how this works. So that's what I'm looking for there. So coming back to this 4 hour, this is the setup here that I'm watching, looking long on the CAD yen, give us an opportunity to push up to the upside there. All right. And on the 1, right, you can run your fib off the top side, and that's what you're looking at. All right. On the fibs coming down. If you didn't manually draw that fib in like we did, right? These are your smart fibs running to the upside. And you see that A got taken out, so you flip your fib and you run it to the downside. All right. So that's where we sit there looking for, right? We didn't get to a 382 yet. Price is pushing down. So one of two scenarios could occur here, right? We might get another push down, right? Into that 118, 127 zone, and then see if we get that reversal. Okay. Like so. Oh. Okay. So that's what we're looking for there. Okay, so let's watch that closely and see what transpires throughout the day today. But that's the CAD yen. Any questions? No. All right, cool deal, cool deal. But beautiful play there. Then we had the CAD yen, Euro yen, the GJ. Right, posted this one yesterday. It pushed down and hit our stop loss, but it's still hovering in the zone, right? We had a shallow retracement, price pushing to the 118, 127 zone. It originally moved, right? Our original setup was here, right? And it originally moved close to 100 pips, right? But then price pushed down, wick down, hit the D extension, but we're still hovering at this weekly level that was a level of interest for us, right? So as we bounce back through the time frames, come to the 4, right? It's a break and retest scenario here. Okay, at this key weekly level. As we zoom out, you see it. All right. So I'm still looking bullish on this one. Right. Still looking bullish. It just might take a while to get that reversal and that flip. So we'll see. Right. But if we do get a strong bearish break and close, that'll then invalidate the situation. So I originally did get stopped out at that 50 pip mark. I did re-enter though, seeing as we're getting this consolidation here, and I'm looking for price to push to the upside there. All right. So we did get a new AB boundary off of that push down. All right, because we did hit the previous D extension. So now we're looking at another 80-20 scenario here where we did get that push down just shy of that 118 level. And all right, we'll see if we get that reversal on that flip. Okay, so we lost 50 pips on that one, which is cool. It happens, right? And we just reassess and take a look to see if our bias has changed, right? And see what we get on the next cycle. Okay, so that's where we are on the pound yen. Come back to the daily, you see that break and retest a little bit more clearly here, right? And we're getting that indecision at that weekly level. Okay, so looking for this one to continue to press to the upside as well, at least to that 175.014, but we could go deeper, right? We could break that level as well and head to 184 at some point. Okay, we'll see. We'll see what transpires in the market, but that's where we are on the pound yen. Coming back to the 1 hour. Questions here?
No, not for me.
All right, sweet. And then we had the dollar yen. Beautiful push to TP2. 317 pips to the good. All right, beautiful play here. Beautiful move down. So now we're sitting at a 618 retracement level. All right, coming into trend line, coming off the lows. We'll see if we respect that trend line and we get this bounce, right? We didn't hold at that TP1 level, right? The daily resistance, right? We pushed deeper into the zone, which is cool.
Was this an 80-20?
Yes, it was an 80-20. Shallow retracement, 118,
okay, yep.
127. Yep.
Yeah, I played that, but then I got out because I was like, well, am I looking at it wrong? Because I realized that I pulled the trigger too early, right at the part, for me to say, yes, go up and take a buy. I had pulled it a little early when I went back and looked at it. So
Hold on, say that again.
I said I had gotten in that one
Mm-hmm.
as an 80-20, but then I went back and looked at it and realized that, I thought that I had gotten in it too early, that it hadn't yet reached, and now I can't find my chart, but that it hadn't reached yet the level that I was comfortable with for me to take a trade up, a buy. So I got out of it.
You were looking to take a buy on this one?
On the US, on that one, yeah.
On the dollar yen? Well, when it came down to
Yeah.
the daily support level?
When it came down to I think it was the 50 or something like that, but it's supposed to be .6118 for my trade rules, and
Gotcha.
I just saw it down there. And I was like, oh, there's a 50, and it was kind of hard to stay true to the I guess whatever trade rules that I'm trying to figure out right now, because I was like, oh, that looks like, and then I just kind of went with it, but I got to work on that.
Yep. And that's part of the process, right? Part of the process. So you're aware of it now.
Yeah.
Right. So now,
Yep.
jot that down in your journal, right, as a note.
Yeah.
Right. And now it's having a conversation with yourself of what needs to happen to allow yourself to be a little bit more patient. Right.
Yeah.
Great work.
Not drinking so much coffee. Yeah. Thanks.
I dig it. But great work, right? You're in the game.
Thanks.
You're in the game. So that's what matters, right? You're able to learn, you're able to experience, and that's where the learning will come, right? The learning won't come if you're not in the game, right? If you're not experiencing these things, if you're not testing the rules and trying to figure out and go through that exploratory process, right? So kudos to you. Great work. Glad to hear.
Thank you.
Absolutely. All right. So boom, beautiful move. 317 pips to the downside off the 80-20 move, right? At its lowest 319. All right. So beautiful work in the market this week, right? Now we're looking at seeing if we get price to shift and push back in the direction, right? So here on this 1 hour, see if this trend line gets respected and see if we get price to start making its way back to the upside in favor of the dollar, right? But we looked at the DXY. It's in an interesting situation, so we'll see. We'll see if the dollar, right, is able to pick up some strength against the yen and start making its way back to the upside. Maybe just getting back to that 137, 861, but maybe it pushes deeper. So we'll see.
What would be your way to say, okay, yes, it's picking up momentum? You looking for it to break some resistance before you say yes, it's picking up momentum, or are you just looking at the fundamentals for that to determine if it's
so you can do one or two things, right? You can run a trend line, right? Whoops, it's not what I wanted to do, but here we go. Right, you can run your trend lines to the downside like so.
Okay.
Right. And look for a break of your trend line.
Okay.
Or if you use the cloud, you can drop your cloud on.
Yeah.
And wait for a break of your cloud.
Right.
So those
Gotcha.
Those
okay.
are your two, right? Two that we teach. There are other methods you can use, but looking for the reversal, price is in your sweet spot. That's number one, right? Price pushed down to the 618 retracement level. First criteria.
Yeah.
Next criteria, do we get a swing low to form? Do we get a trend line break, or do we get a break of the cloud? All right.
Okay.
So stop loss look like this. Boom. Okay. Now we wait for those other criteria to be met, because criteria number one is met, 618 retracement. Criteria 2, swing low. We got to swing low to form. Right. Criteria 3, we need a trend line break or a break of the cloud. Whichever forms of confirmation you use for a trend reversal, right? Some may use
Yeah.
others than that, which is cool. Right? Do those confirmations get met for you to enter the trade? And then you pull the
Right.
trigger, set
Okay.
your stop loss, and let it do what it does.
There you go. Okay.
All right.
Thank you.
You are welcome.
Right. You see, on the daily, the bias is to the downside, right? That's what you have on the daily.
On the daily. Yes. So overall, right? We're looking at that crown pattern on the end, right? So that's where this 137,861 level will come in at, right? So if this crown, if the dollar stays low, stays bearish, right, we'll see this continue to fall. Right, so it's going to be dependent there, but yes, right, from technically we are looking at this crown pattern here to finish out, right? And it's just a matter of when will it finish out, right? Currently this is our right tip. We got a double top scenario here, right? So do we get price to push back up, give us a triple top, or does price push deeper, right? If the dollar picks up some steam, picks up some strength, right, does that push deeper to this next level? And then do we get something like that, right? So those are things that I just have in mind as I'm looking at this from a technical perspective, right? So we also have our trend line running here. So do we respect that trend line or do we break it? The trend line running up, right? So yes, overall bias is bearish. However, on a short-term time frame, we could be looking at price to push to the upside, depending on what the dollar does in this scenario, because we know the yen hasn't changed. So it'll be more about the dollar index, and if we get some bullish action on it, or if we stay bearish. All right, because the same thing goes with the DXY, right? Because we're also working on this crown pattern here on the DXY, right? So this being at the bottom of this range here, do we continue pressing down to fill out this right tip? And this is how these things correlate, right? Do we continue to press down to fill out the right tip? Or does price either stay in this range or does it press higher? Right? So those are things that I'm looking at, right? We know what the Fed is doing. We got some data that needs to come in on Friday still, right? So that will help give us an indication or a catalyst potentially in one direction or the other, right? If that data on Friday non-farm payroll comes in hot, like the ADP number did, we could see this dollar index push back to the top of this range and maybe break out to the upside, right? If that data comes in at expectation or below, then we could see the DXY push to the downside, right? So that's where we wait on the data to see what that catalyst is going to be, because the Fed decision, it wasn't the catalyst to break us out, right? So that's how I'm looking at this. So I'm still waiting to see what happens with the dollar, because that's gonna be the driver in that dollar yen scenario, I believe. Make sense? Maybe.
Yeah.
Okay. All right. So we'll see, right? But that's how I'm looking at it, right? So we got our uptrend line coming there, we got our downtrend line coming there, and we'll see. We're getting to an inflection point. We got to make a decision. We'll see which way the market decides to go. Okay. We shall see. All right, so that's the dollar yen. So we had some good moves this week, right? Really good moves this week, and still got a little bit to go, right? But if you've met your goal for the week, right, don't leave any money on the table. Okay, don't leave any money on the table. Take a break, reassess, allow the market to continue moving, and you can pick up next week if you met your goal. All right, so that's where we are. Let's take a look at these euros. Euro Aussie. Still hovering. Right, daily time frame perspective, we're still in this 118 127 zone, trying to push back to the upside. We'll see what happens. Right now, small chance that the ECB comes in below expectation. Right, we could see this turn over and make its way to the downside, but I don't see that occurring. But we still could see, because right, we know this thing moves in cycles. We could see a retracement occur at some point, right? We got one off the last fib. It's been a long, strong push to the upside. So we could see, even if the ECB comes in at expectation, right? And they have a similar narrative that the dollar took. I mean that the Fed took. Maybe we do see a retracement, right? We need to break below this 164 425 level, right? But maybe we see that, if that's the narrative. Okay, so we'll have to wait and see. But 80-20 scenario potentially developing on the daily time frame. We come down here to the 4, right? And on the 4, let's take this out. We also have an 80-20 scenario, right? Also have an 80-20 scenario. Price is hovering in this range right now. So we'll see what happens, right? We'll see what happens. But 80-20 scenario potentially on the daily and on the 4-hour. Okay. Again, this monthly level here at 164 is going to be key. So as we continue making our way down, this is where we sit on the 1, right? It's back and forth. We got a nice, beautiful retracement here, 618 level, started making our way back to the upside. Okay, started making our way back to the upside. So we'll see what happens with the ECB decision. But right off of that deep retracement, you see price has already broken the trend line and is trying to make its way to the upside here. Okay, so we could see, if the ECB is hawkish, we could see price follow through. And push to the upside there. So we'll wait and see there. Questions on this Euro Aussie?
No, for me.
No? All right.
No.
Sweet. Euro CAD. Still watching this one, right? Again, bullish on the euro. Bullish on the euro. CAD's in an interesting situation. On the daily, still haven't gotten a 382. We're hovering at this next weekly level now, similar to what we did here, right? We're hovering at this week. We got a weekly and monthly resistance level here. We got some indecision. So we'll see what happens. Okay. But we're in some interesting situations at some really, really high prices. So we need a breakout in order to really tell us, right? If we break to the upside, get to this D extension here on the 4, right? And we break above this monthly level, looking for a retest and a continuation. Okay. If we stay below this level, right, what we could see a spike up to get to that D extension, but stall at that 151 level, right? If that occurs and we stay below, then we'll be looking for a move back down, right? Because we've already got a 50% retracement here. So that D extension is going to get achieved at some point, right? So is it going to be now is the question. Okay, it's going to be now is the question. So that's where we sit there. So coming down to the 1. As we zoom back, get our fibs on, right? We also got similar deal on the 1 hour as the 4. right? So a spike up to get to that D extension would be beautiful. We'll get a reset, right? Now, if we stay below this 151 level, that's going to be the question. Okay, so we'll have to wait and see there. But that's where we sit. Sitting at some high prices. We need a catalyst in one direction or the other, but still bullish on the euro nonetheless. Okay, questions on the euro CAD?
No, nothing.
No. All right. Keep rocking through these real quick. Euro Swiss. We took a buy on the Euro Swiss yesterday. And it failed. It pushed deeper, which is cool. Here we go. All right, this was a scenario I was looking at yesterday. I didn't place my stop outside the A of the capital fib, right? I was just looking at this smaller move, the sub fib move here, and it pushed the D extension there, right? Now we're hovering. So we'll see if we get a catalyst to push us to the upside. Okay, take that out. That out. That was the move that failed, which is okay. Boom. So now we're looking at, this is our capital fib here, and we're just ranging. We didn't get that crown pattern. We pushed back down to the lows. So now we'll see what happens with the ECB decision. All right. But retested that trend line again, nonetheless. All right. The backside of that downtrend line. So we'll see. We'll see. That was the 1 hour. Coming back to the daily, we're just hovering. Right. We're just hovering. We know the Swissy has some strength, but we could be in a position to get the euro to push back to the upside, right? Potential double bottom here if we get price to push up. So we'll watch that closely as we move through, right? That was the crown pattern that I was looking at. That failed. Well, it's technically still intact. Deep crown. But we'll see what happens, right? We'll see if we get this reversal to occur. Okay. That's what we're looking for almost as a reversal, right? Still in this range, still pressing sideways. What's up?
No, I was just looking at the crowns. That's just something that I'm gonna have to keep on working with. I appreciate the lesson I did the other day on the crown, but yeah, gotta learn more about it and stuff.
Yeah.
But yeah,
once you start
picking it up,
it takes a minute to see it, but once you start to see it, you
right,
won't unsee it.
Right.
Yeah, you won't unsee it.
Right, but the bias is to the downside, so why would you look for the buy still? Because of the euro?
Because of the euro. We know the Swissy is strong too, because of the safe haven scenarios. But with the bias bullish on the euro, right? I'm looking at least to get a high price on this. So that's why. That's why. Looking to at least get a high price to then be able to get back short. But we may not get it, right? So, and if we don't get it, that's okay too. But that's the trend line coming to the downside here, right? Sideways push here. So we'll see. We'll see what happens. All right. That trade that I took yesterday, it was that was one that came off the software that we have. So I pulled the trigger on it, but that's cool. So we'll see. We'll see what happens. Right now we're staying below the trend line. We're just pressing sideways. So we'll see if we get a push to the upside with the news today, or if we continue pressing down. All right. Because yes, Danette, you are correct. The overall bias is to the downside. All right. Any other questions here on the Euro Swissy?
For me.
All right, cool deal. We're close to time. Let's see. Quick look at the euro dollar, and we'll take a quick peek at the cash Swiss brandy. Euro dollar, we're still hovering at these levels, right? Not able to break out to the upside. Dollar didn't push it to the downside, so we could see this continue to rise. 618 retracement, pushing to the upside. Bullish euro, right? We could, if we get a break at this level, we could be making our way to that 114 level at some point. All right, coming down to the 4. Right, 4. We got an 8-6 retracement. 118 levels there at 111. Right, so pressing to the upside. Pressing to the upside. Coming down to the 1. Right, we also got a 50% retracement. Matching the extension is above that daily level. Right, so all signs on this one says we need to break above that daily level, right, to get to the D extensions on the 1 hour, the 4 hour, and then potentially continue rising higher, making our way to those mid-teens on this euro dollar. So bias is bullish here, unless the ECB comes in with a dovish tone. Right, we'll see this one continue to rise as well.
So you wouldn't wait for that one to hit the 618 if that's in your rules to pull the trigger up or to go
The 1618 extension level here.
like the 80-20? Well, I was just thinking about, yeah, I was thinking about an 80-20 on a 1 hour Euro USD, thinking that I thought that I had, and this my chart is wrong, but I thought that I reached the that it did a 382, which a shallow retracement, and then maybe that's not considered hovering at the 118 127 level. Yeah, and then I was just waiting on a
I got you. On my fib, I got a 50% retracement here.
Okay.
Yeah.
Okay, I might have started mine at the wrong level.
Zone, but I got a 50% retracement, so the 80 would be invalidated there.
Okay.
Yep. Okay.
Cool.
All right. So that's the euro dollar. Let's see. CAD Swiss. Quick peek. Got to get the kid off to school. Let's see what's happening. Ooh, we broke below. Let's see.
Looking good, huh?
Interesting, man. 80-20 not playing out here. Pressing down to the D extension. All right. We could be headed to that D extension there.
I quit this. I quit it. I gave up all loss. It's over. It's like, I'm waiting for that D extension.
Oh, man.
I took an L on this one too. Broke that monthly support level. That is interesting. So look, all right. This is why that's interesting. These are all-time lows. These are all-time lows. So we're in
Where was the weekly D?
Huh?
Or was none? Wasn't what was the weekly D extension?
Let me see. I don't know if I ran that one. I did that on the dollar Swiss. Let's see. Ooh, 46.
Yeah, that's what I thought. It was in the middle of nowhere.
Yeah. Let's see. This is gonna be interesting here. This is some some new lows. Let's see. Let's see how far it goes, right? So looking at it, we got a break and a retest. Right? There's your break and retest right there. Broke that level, came back, retested, and we're headed lower. We're headed lower, right? So that 80-20 on the daily is likely not going to come back, right? Now we're looking, all right, we're continuing bearish. D extension on the 4, D extension on the daily. Yeah, this one's short, man. This one's short unless there's something major that comes through on the CAD, right? We're pushing to the downside here. Yeah. So this is a look on the 1. B boundary could get a pullback, high price, but bias on this one is short, man. With that break of that monthly level, we might not see it come back above. We might not see it come back above for a while. Interesting. I hadn't looked back at this one, Brandy. Appreciate you bringing it to my attention. We'll see what happens. We'll see. Yeah, I'm looking at this one to continue down. All signs pointing to the downside here. No 80-20 recovery. Interesting. Cool deal. That's the CAD Swiss. Down. We could get a pullback, but on that, looking for a high price to get short. Yeah. Sequence is a beautiful thing. That weekly fib is playing out. All right. Questions on anything that we covered this morning?
No, sir.
No, thank you.
You're welcome.
Thanks.
All right, good people. We'll be back at it Saturday morning, 7 a.m. for our weekly ritual. Be patient.
Okay.
Allow the market to do what it's going to do. Hear what the news has to say. Hear what President Lagarde has to say. See what the data is. See what the market's response is, and then see if it pushes price into position for your rules. Right? Don't try to anticipate it. Be patient. Allow price to do what it does. All right. Have an awesome day. Have an awesome Friday. And we'll see you Saturday morning.
Right?
Yes.
Okay.
Goal, we can look at it later, but goal hit of the extension on the daily.
Okay, I'll check it out.
Yeah. Yeah.
I'll check it out. I got to get the kid to school. So,
Yeah.
I'll check it out. And if there's anything interesting, I'll post a chart.
Mm-hmm.
All right.
Okay. Thank you so much. Have a good one.
Thank you guys. Have an awesome day. Peace.